Hi guys, welcome back to the channel. My name is Dave. The Qs, also known as QQQ, also known as the NASDAQ 100 Index, it's been on a nice little run here in 2023. It's our innovation ETF with innovators like Tesla and Alphabet and of course Pepsi looking for all new ways to put sugar water in your body. All new exciting flavors coming out shortly, I suppose. But anyway, it's up over 20% year to date. So that's pretty impressive. But I've got another ETF that's actually beat it year to date. And over the last 1 year, 3 year, 5 year, and 10-year periods. That's worth talking about. During the same time frame, it also beat the S&P 500, which is kind of our goal in general, right? Beat the S&P 500. So, if that is what you're looking for, you want to find out what this is, please stick around. Whoop. Now, one of the nice things about QQQ is that it is fairly diverse. You could definitely use it as your anchor in a portfolio and kind of build around it. So I'll put the sector allocation up here now, and you're going to see multiple sectors and industries represented, just like Pepsi Company is in here, along with Tesla and Alphabet and things like that. So you've got IT, communication services, consumer discretionary right there at top. Then you also have healthcare, utilities, energy, things like that within the QQQ. So it can definitely be an anchor. Whereas the one that I'm going to talk about right now can't really do that. So it has to be a portion of what you're doing or an add-in of what you're doing. So today we're going to look at XLK, which is the SPDR Technology Fund. So XLK is the Technology Select Sector ETF from SPDR. Now they've got all kinds of sector ETFs if you're not familiar with this. I've talked about XLV, which is their healthcare sector ETF before, but XLK is all about technology. And you can kind of see the 1 year chart here, unimpressive, down 3%. Like most everything in 2022, it was a pretty rough year for a large part. But year to date, we've done quite well, right? Up, like I said, over 20% year to date. We'll look at that here in a little bit. The expense ratio is quite reasonable for most of their sector ETFs. In a 0.1% in this case, or 10 basis points. That means $10 for every $10,000 you invest will come out of this fund to manage the fund. So that is quite reasonable in my opinion. The yield on this one's about 0.9%. Nothing to write home about, but not too shabby. Now, if we look at the holdings, it's all technology. The top 10 holdings here. Now, it's going to be dominated by Microsoft and Apple. And that's really important to understand when you get into this, because exposure to Apple, Microsoft, things like that, it's really easy to get overexposed. So again, we'll dive into that more. But then you have NVIDIA, Broadcom, Cisco, Salesforce, Accenture, Adobe, Texas Instruments, and Advanced Micro Devices, or AMD. And actually, Apple, which is an outstanding stock, is definitely the most pervasive stock in our stock market. It's so easy to get overexposed. So I always like to point out that XLF, which is the financial sector ETF, right? Think banks. The largest holding in XLF is actually Berkshire Hathaway at 12.76%. But the largest holding of Berkshire Hathaway at 38.9% is Apple, which makes Apple about 5% of the financial sector ETF, or the fifth largest holding in the financial sector ETF, which is just crazy. I mean, Apple is definitely the dandelion of our stock market, right? It pops up everywhere. You can't get rid of it. So you have to be mindful of fund overlap as you buy different funds and just how exposed you might be to something like Apple. So we'll compare fund overlap here shortly to of XLK and QQQ. But just to be clear, when you buy XLK, you're buying an ETF that's dominated 47% by Microsoft and Apple. So bear that in mind. So definitely consider XLK as a portion of a portfolio that you can use as a building block, right? We'll combine this maybe with QQQ and build out a complete portfolio as we move forward. But there are other alternatives as well. I think VGT, if you like this one, XLK as we go through this, you can also look at VGT as an alternative. And again, pulling a few of these together and studying overlap, fund overlap, might be a really great thing because, what you're going to find in XLK versus QQQ is quite different. QQQ, you're going to get Amazon, Tesla, Meta, Alphabet, and Pepsi, which are not included in XLK, right? Very different. But I'm going to now show you a complete list of XLK right here. So you're going to recognize the top holdings, right? The top holdings are going to be just like we talked about, and then you're going to throw in things like NVIDIA and Broadcom and everything else here. But as you go down, you might be unfamiliar with some of these different little components that they have. But again, we're so dominated by the top few. Those top 10 holdings represent, what was the number here? About 70%. So you're going to be dominated by those top 10 and some of these smaller components. Well, they're there, but they're not going to have a big impact on the fund. Now let's jump over and take a look at the charting. Now this is historical charting. So where we go in the future, Who knows? There are some people that are not big fans of Apple over the next couple of years. But we start at the year-to-date chart. And again, I want to point out that we're looking here at total return for XLK in orange, the S&P 500 in blue, and the Qs here in purple. This is the year-to-date chart. So we're just edging out QQQ by a fraction. We go to 1 year, again, total return, adding all those dividends back in, you can kind of see we flip-flop. But it's interesting how XLK has been floating to the top, again, dominated by Apple and Microsoft. But you can see that it's outperformed, again, on the 1 year chart. Again, follow the orange line. As we go out to a 3 year chart, again, orange on top. And you kind of see the S&P 500 and QQQs kind of matching up. Then we go out to a 5 year chart. And again, we're up there quite a bit. A pretty big spread, right? QQQs in the middle, S&P 500 following up. And then the 10 year chart, it's pretty dramatic again between the S&P 500 and the QQQ and XLK. But again, XLK kind of comes out on top here again over a 10 year period when you figure in total return. So pretty impressive overall that XLK over that long a period of time has outperformed everything else. You can kind of see that bull market that we had in the past really paid off for technology stocks. And then even in the recent history, with everything that we've had going on, still XLK floating to the top. And this is ETF Research Center, or ETFRC.com. So if you want to study fund overlap, this is kind of a fun site to go to. Plug in your two funds, find your fund overlap. So in this case, we're comparing XLK to QQQ. And there are 25 that overlap. That means 37.9% of the 66 funds that are in XLK are also in QQQ, and 25% of QQQ are in XLK. So there is quite a bit of overlap in this case, and you can kind of see what the top 5 are down here. You can also do a page subscription here and get more information, but you see Microsoft, Apple, Nvidia, Broadcom, and Cisco. Those top 5 that are in both funds are right there. So you can kind of study this fund overlap. So what does this tell me as somebody that's looking to build out a portfolio? Well, I would suggest that both these products are good and offer some diversity. So if you want both of them, you can, but you still want to keep it as a portion of your portfolio. So let's say you decide you're going to dedicate 20 or 25% total. Maybe split these up into a 12 and 13%, or 10 and 10, or 15 and 5, whatever works best for you in your personal situation, so that you can kind of still keep things like Apple and Microsoft under wraps and not get overexposed to one individual stock, even though you're not buying any individual stocks. So that's a quick look at the XLK. Now, my long-term plan here is to use this product and several others that I like to pull together a portfolio that offers growth and income and flexibility depending on where you are in your life. So if you like that kind of thing, please like and subscribe. But I think this is a great portion of a portfolio, so we'll continue to build that out. Now, I really appreciate you watching. Have a great night. Take care.